Bullish on Bitcoin because I think it does truly solve the problem. It's held up against all sorts of different macro environments, all sorts of different technical challenges. Um, and there's so much building on it happening, right? They say building happens in bear markets. And I've been watching that closely. Any given 6 month period, Bitcoin's price is going to be tied to liquidity. So a handful of choices between Yellen and Powell and a few others can probably move the price pretty substantially. So I don't really try to make 6 month predictions, but I think the floor is probably in, and I think we're headed higher in the years ahead.
Lyn Alden is a respected financial analyst, investor, and economist known for her deep understanding of macroeconomics and her ability to provide insightful analysis on various investment topics. During the interview, Lyn expressed her belief that the next bull market will occur regardless of whether or not there is a spot ETF. However, she noted that as more iterations and filings from large entities like BlackRock and Fidelity are submitted, the chances of approval increase. These filings address the reasons for previous rejections by the SEC and make them more specific, putting the SEC in a position where they either have to reject Bitcoin entirely or eventually approve a spot Bitcoin. Despite granting approval for multiple futures exchange-traded funds, the SEC recently greenlit a Bitcoin futures ETF with leverage. The US SEC has approved the first leveraged Bitcoin futures ETF on Friday. Lyn found it ironic that the SEC allowed a leveraged Bitcoin futures ETF, which she considers a riskier product than a spot Bitcoin ETF. She emphasizes that she wouldn't want to see a significant percentage of Bitcoin held by large entities like BlackRock and Coinbase. She highlights the issues that gold faced with centralization and abstraction, which allowed for numerous claims to be built on top of it. Following a report by the Wall Street Journal disclosing the dissatisfaction of SEC insiders with the recent batch of spot Bitcoin ETF applications by several prominent financial institutions, including BlackRock, WisdomTree, Fidelity, ARK Investment, and Invesco, 4 firms resubmitted their filings on Friday. We will now bring you clips of Lyn Alden from her recent interview with Swan Bitcoin. Before we proceed further in this video, please make sure to subscribe our channel and click the bell icon to stay updated.
I think the next bull market's going to happen regardless of whether or not there's a spot ETF. This kind of thing I think can just influence the timing and the magnitude of it, because it allows potentially new pools of capital to enter that would otherwise, have to enter slower or, in other ways. So in general, I think it would be constructive for price. Um, and as to the odds, I try not to guess these odds. I think we are getting closer. I think that the more iteration you see, especially from these larger entities like BlackRock and Fidelity, it increases the odds of one eventually being approved, because these filings are not just identical filings from years ago. The SEC always gives their reasons for, why they turn them down. Whether or not they're valid is another story, but they say, okay, here's the reasons why we turned it down. And so then these filings come along and say, okay, we've addressed the reasons that you've turned the other ones down. And then they can say, well, it's still not quite. So okay, that's fine. We iterated again. We went and made it even more specific, right? So it's eventually kind of the SEC gets stuck in a corner where it's like you answered everything they said to do, and they either have to say we don't like Bitcoin, we're not going to approve one, or they just have to capitulate and start allowing a couple spot Bitcoin ETFs to form. I think one of the funny things is they allowed a leveraged Bitcoin futures ETF, which is clearly a less safe product than a spot Bitcoin ETF. And so it's really hard to be in that environment where you're just always holding back a spot ETF, but you're willing to do a leveraged futures ETF. Um, as for how it's good or bad, I mean, I think, I would not want to see a particularly large percentage of Bitcoin uh, held by, BlackRock and Coinbase and, large entities. Um, Generally, the biggest problem that gold faced is because gold was slow. Gold got centralized and abstracted, and allowed for all sorts of claims to be built on top of it. And those claims were not tested very frequently because most people didn't want to withdraw their gold. They liked having access to the liquidity of a globally interconnected ledger, for lack of a better word. Um, Whereas with Bitcoin, I think the main thing is that it's really easy to test, um, whether or not someone has the Bitcoin they say they do, making sure there's not a lot of IOUs being built on top of it, um, at least relative to the size of the overall market. And so, I think it's I think it's better if people self-custody or do collaborative custody or do, local custody, like let's say Fedimints, things like that. There's a spectrum that people can do rather than these big giant honeypots of, like one entity holding millions of people's Bitcoin. But I think that at this stage of adoption, people do want to have it in their brokerage account. They want to have a slice of Bitcoin in a diversified portfolio. And I think to the extent that there are a handful of different ETFs out there, that's good for them. If someone would not buy Bitcoin otherwise, or if the majority of their capital is in their 401k or in their IRA, and they want to have some X% of Bitcoin in there, and that's the majority of their capital, the fact that there's a spot ETF, I think, is a good thing. But in general, it's always going to be an inferior product to the real thing, because the real thing, you can self custody it, you can bring around the entire world with you, you can tip people on Nostr with it, you can do whatever you want to do with it. Whereas when you have it in that ETF form, it's only really good for price. It's more just like strictly an investment, which is a good starting point. But it's just different pools of capital, different products for different pools of capital.
During the interview, Lyn discussed the potential market size for Bitcoin and its bullish implications. As regulatory clarity improves and Bitcoin becomes more accepted, different pools of capital view it as a normal asset, leading to increased adoption and demand. In 2017, BlackRock CEO Larry Fink called Bitcoin an index of money laundering. However, in recent years, BlackRock has taken a more positive view of Bitcoin. In 2021, BlackRock announced that it had invested in two Bitcoin mining companies, Marathon Digital Holdings and Riot Blockchain. And recently, in June 2023, BlackRock filed for a Bitcoin ETF with the SEC. Lyn believes that adoption in developing countries is preferable, but she acknowledges the inevitable entry of large pools of capital, which can bring liquidity and support to the Bitcoin ecosystem. The ranking comes straight out of blockchain data platform Chainalysis' Global Crypto Adoption Index report. According to the report's findings, Ukraine and Russia are the most crypto-savvy nations out there, ahead of traditional tech behemoths like the USA, China, and Japan.
When you look at the total addressable market of Bitcoin, there's obviously a big range. It's hard to say exactly what that market is, but it's not far-fetched to say most entities would want to have some handful percentage of their assets in this portable, finite, self-custodial asset, liquid. Um, and so another bullish thing about it is that in some ways, certain entities can't even adopt it until it gets bigger, right? So when daily trading volume was in the millions, a billionaire would have trouble getting in and out of it without moving the price. There's just not enough liquidity for them to comfortably uh, enter and exit it in size, other than just dabbling. Similar today, there's billions of dollars of liquidity, but a $1 trillion pool of capital has to be careful about moving the market, how much they can enter or exit, and things like that. And so I think as you see more and more, I don't like the word regulatory clarity, but it comes up a lot. I mean, basically, once they see, okay, Bitcoin is different than some of the other assets, um, the government's not going to ban it, or it'd be silly if they did. You start to see different pools of capital to say, okay, it's normal to have a non-zero amount in this asset. So 6 years ago, BlackRock called it like an index for money laundering, and now they're filing ETF to hold it, right? So they've done a complete U-turn um, on how they perceive the asset, um, largely due to market demand, ongoing adoption, ongoing education about the space. I think to some extent, it's I I would always like to see, like, I'm always more interested in developing country adoption of Bitcoin
Sure.
more than I am like Wall Street adoption. But to the extent that the network continues to be successful, large pools of capital entering it are inevitable. And they do add liquidity to the overall ecosystem and overall market size. They benefit miners, they benefit users. So it is a positive development, in my opinion. But of course, I'd be more bullish to see a thousand different Fedimints pop up, and
Mm,
people around the world custody it in their countries, rather than see these big honeypots form. But I think
totally.
that I'd have to agree with that phrase, like everything's good for Bitcoin. I generally phrase it a little bit differently, which is most things are good for Bitcoin, and institutional adoption is one of them. So to the extent that there is a spot ETF, I think that'd be beneficial. Right now, you've had all sorts of entities have had to use inferior products. Um, and I think a spot ETF would clean up the market a little bit, at least for American users. Other countries already have, ironically, spot ETFs. It's not really been an issue. So I think we're just seeing another wave of adoption. And I think probably when we look back, 2, 3, 4, 5 years from now, it'll seem obvious. Like, well, of course, there's of course having a Bitcoin in your portfolio as some slice makes sense, even for kind of like normie finance.
While there are concerns about the regulation of spot exchanges and the concentration of Bitcoin holdings in the hands of major entities, the demand for Bitcoin ETF continues to grow. As more filings address previous SEC rejections and offer improved solutions, the chances of a spot Bitcoin ETF approval increase. As for its end of 2024 beginning forecast, the best possible scenario for Bitcoin is called the maximum bubble territory. This territory identifies a price area from $180,467 to $245,226, compared to the most bearish scenario from $20,056 to $26,152 on January 1, 2024. With BlackRock applying for a Bitcoin ETF, could this be a sign of the tides turning for the SEC's turbulent relationship with crypto? It might be a bit early, but the news is no doubt encouraging for investors. How will the increasing acceptance and adoption of Bitcoin shape the future of global finance? Share your thoughts in comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.